Good morning. This is Robert Kaars Sijpesteijn bringing you this morning's market update. US equities closed weaker yesterday as they pulled back from a recent rally, which took them to new heights for 2016. Despite positive movement in the healthcare sector, falls in commodity-related and industrial shares, such as a fall in copper prices, are all down to a weakening demand and a pullback off of all commodities. The US 500 declined 7.5 points to close on 2,061.38, while the US Tech 100 dropped 24 points to close on 4,504. And the Wall Street had the biggest movement, falling 68 points to close on 17,703. Not only is the commodity-related industries causing a slight pullback in US indices, but shares in General Motors, Ford and Fiat Chrysler, the three biggest US car makers, all fell on Friday after weaker than expected domestic sales increases reignited debate about a possible downturn in the industry. General Motors said it sold 0.9% more vehicles in March than in the same month last year. Its retail sales to private consumers were up 7% year-on-year, but fleet sales were declined following a decision to restrict sales to car rental companies, which were down 36%. Meanwhile, Ford, the market number 2, and Fiat Chrysler, the number 4, announced 8% sales increases. Ford's sales were led by a 13% surge in sales of its sports utility vehicles, which have enjoyed a boost of falling fuel prices. Fiat Chrysler's sales benefited from the latest in a string of strong performances from its Jeep SUV brand, whose sales were up 15%. However, at close of trade, Ford shares had lost 3% to $13.09, and General Motors were down 3.1% at $30.46. Fiat Chrysler had retreated all of 4.1% to $7.73. The negative reaction to the sales figures reflected a nervousness over the sustainability of last year's record 17.5 million US car sales. General Motors had previously said it expects sales to plateau rather than fall this year, but some analysts predict that growing economic concerns and rising interest rates will start pushing sales down, potentially prompting the current retreat. In the commodities sector, gold declined further yesterday, dropping $5 to close on $1,215.30, with Brent crude losing 76 cents to close on $37.59 a barrel. With Saudi Arabia and Russia trying to curb production, Saudi Arabia has now taken steps to slow Iran's efforts at increasing oil exports, banning vessels that transport Iranian crude from entering their waters, according to traders and shipbrokers. Iran, which already faces insurance, financing and legal obstacles despite the lifting of sanctions linked to its oil industry in January, is now facing an issue with receiving tankers to export their oil. Iranian vessels carrying the country's crude are restricted from entering ports in Saudi Arabia and Bahrain, according to a circular sent by a shipping insurance company to its members in February. This notice said ships that have called to Iran as one of its last 3 ports of entry will also require approval from the Saudi and Bahraini authorities before entering their waters. Shipbrokers and traders have relayed the same message since. Iranian oil executives have expressed their concern about the message circulating in the market, saying it is only adding to problems they face in selling their crude. In Europe, trading was fairly stable, with the UK 100 gaining a mere 5 points to close on 6,147.4, and the Germany 30 alternatively lost 54 points, closing on 9,749.1. In today's corporate news, Credit Suisse Chief Executive Tidjane Thiam has said bank is on track to double profits in Asia within 3 years. Blackstone has agreed to pay Hewlett-Packard Enterprise up to $1.1 billion for a majority stake in Emphasis. Today's economic data focus at 9 o'clock in EU Market Services PMI for March is released, and at 9:30 the UK Market Services PMI for March is released. At 10 o'clock in Europe, retail sales for February are released, and at 1:30 the US trade balance for February is released, whilst at 2:45 US Market Services PMI is released for March. That's all for this morning's market update. Thank you and goodbye.